One free bank form can decide whether your family gets a clear path after your death or whether they are told to wait for estate papers before touching the money you left behind. That is why this warning matters for seniors, surviving spouses, adult children, and caregivers. Your checking account may be used for Social Security, pension deposits, rent, medicine, utilities, and funeral costs. But after death, the bank does not simply hand money to the person who says, "I am the daughter," "I am the son," or "I am the spouse." The bank looks at its own records first. And here is the part many families do not know. A will in your drawer may not be enough. A power of attorney may not help after death. And a trusted child who paid your bills may still have no automatic right to withdraw money. The form we are talking about is usually called a Payable on Death Beneficiary designation. Many people call it a POD form. Some banks may use words like in trust for, ITF, or transfer on death, TOD. The name can change, but the idea is the same. The bank must have the beneficiary record on file before death. In this video, you will learn what this form does, why the account may be held without it, who should check it first, and the one mistake that can leave a family standing at the bank counter with no access when they need money most. Stay with me, because near the end, there is also a serious scam warning about fake inheritance calls and fake frozen account fees. Welcome to Use a Life Bulletin, where we explain important USA updates in clear and simple words. Today we are looking at a bank account issue that is easy to ignore while everything is normal but painful for families after someone passes away. This is especially important if you have a checking account, savings account, money market account, or certificate of deposit in your own name. Here is the clear answer. Your bank account does not freeze in every situation when you die. That claim is too broad. What happens depends on how the account is titled, what the bank records say, whether there is a joint owner, whether there is a trust, whether there are survivorship rights, and whether a payable on death beneficiary is already listed. But the warning in the title is real. If an account is only in your name, and there is no joint owner, no right of survivorship, no trust, and no payable on death beneficiary, the bank may not let your family simply withdraw the money after your death. The account may have to go through your estate. That can mean probate papers, a court appointment, a personal representative, or a small estate process. That is why the words "on file" matter so much. The form does not help just because you talked about it at home. It does not help just because your child knows your wishes. It does not help just because your will says who should receive your money. The bank normally needs the beneficiary designation accepted and recorded in its own system before the account owner dies. Let me make this simple. Think of your bank account like a locked drawer inside the bank. While you are alive, you hold the key. You can deposit money, spend money, move money, close the account, or change the beneficiary if your bank allows it. A payable on death beneficiary does not get the key while you are alive. They do not get to spend your money. They do not get to see your balance just because their name is listed. Their name matters after death. Without that beneficiary record, the bank may see the account as part of the estate. That means the money may wait until the correct legal person is appointed or approved. With a valid POD record, the bank already has a direction. After the bank receives proof of death and confirms the beneficiary's identity, it can usually pay the remaining funds to the named person, subject to bank rules, federal benefit returns, creditor issues, and state law. This is why the form matters. It is not magic. It does not erase debt. It does not replace every estate plan. It does not control every type of account. But for many ordinary bank accounts, it can reduce delay, confusion, and family stress. Here is where many people get surprised. A will is important, but a will may not control a bank account that already has a beneficiary listed. If your bank record names one person and your will names another person, the bank may follow the beneficiary designation on the account. That is why old bank records can create serious family problems. A former spouse, a deceased relative, or a person you no longer trust may still be listed if you never updated the record. There is also a major difference between a joint owner and a payable on death beneficiary. A joint owner may have access while you are alive. Depending on the account, that person may be able to withdraw money, see transactions, use checks, or close the account. That can help in some families, but it can also create risk if the wrong person is added. A POD beneficiary is different. The beneficiary usually has no rights while you are alive. They do not control the account. They do not own the money during your lifetime. The designation is simply an instruction for what the bank should do after death. For many seniors, that difference is very important. Now let us talk about who should pay the closest attention. First, pay attention if you have a bank account in your name alone. This may be the checking account where your Social Security or pension arrives. It may be a savings account you opened years ago. It may be a CD that you forgot to update. If there is no beneficiary on file, your family may need estate papers before the bank releases the money. Second, pay attention if you are married but not sure how the account is titled. Many married couples have joint accounts with survivorship rights, but not every account works the same way. Some accounts are individual, some are joint, some have clear survivorship language, some do not. The safest step is to ask your bank or credit union exactly how the account is titled. Third, pay attention if you are an adult child helping a parent with bills. Using a parent's debit card is not the same as being a legal owner. Helping with online banking is not the same as being a beneficiary. Even a power of attorney may not help after death, because in most cases, a power of attorney ends when the person dies. Fourth, pay attention if your family has changed. Divorce, remarriage, death of a beneficiary, birth of a grandchild, a move to another state, or a broken relationship can all make old bank records dangerous. The bank does not know your current wishes unless the records are updated, and who may not be affected in the same way. If your account already has a valid POD or ITF beneficiary, if it is properly titled in a living trust, or if it is a joint account with clear survivorship rights, your situation may be different. But even then, review it. A missing name, old address, spelling mistake, or bank merger can still create confusion later. Let us look at a simple example. Imagine a woman named Linda. This is only an example. Linda is 76 years old. Her Social Security and small pension are deposited into one checking account. She also has a savings account and one certificate of deposit. Her daughter helps her pay bills, but the accounts are still only in Linda's name. Linda has a will. The will says her daughter should receive what is left. But Linda never asked the bank to add her daughter as a payable on death beneficiary. When Linda dies, the daughter brings a death certificate to the bank. The bank may be polite and respectful, but it still has rules to follow. The bank may say, "We need documents showing who has legal authority for the estate." That means the daughter may have to deal with court papers, a small estate affidavit, or a probate process before she can receive the money. This can happen even when the family agrees. It can happen even when everyone knows what Linda wanted. The bank must follow the account records and the law. Now change one detail. Years before Linda died, she visited the bank and added her daughter as the POD beneficiary on the checking account, the savings account, and the CD. After Linda's death, the daughter still needs documents. She may need a certified death certificate. She may need identification. She may need to complete the bank's claim form. The bank may also review whether any federal benefit deposits after death must be returned. But because the beneficiary was already on file, the process can be simpler. The bank has a clear instruction in its own records. The result can still depend on the bank, the state, and the exact account facts. But the missing record problem is reduced. There is one more detail that matters for seniors receiving Social Security. Social Security benefits cannot be paid for the month of death. For example, if a person dies in July, a payment received in August for July may need to be returned. So if a deposit appears after death, do not assume the family can keep every dollar. Some money may have to go back to the federal agency. This is one reason families should not rush to empty an account after someone dies. The bank may need to return certain federal payments. The estate may have valid bills. The bank may need documents. And if a beneficiary is listed, the bank still has to confirm identity and follow its own process. There is also an important insurance detail if your balances are high. FDIC deposit insurance rules for trust accounts, including POD and ITF accounts at insured banks, changed effective April 1st, 2024. In general, trust deposits are insured up to $250,000 per eligible beneficiary, up to a maximum of $1,250,000 per owner at the same bank when 5 or more eligible beneficiaries are named. Credit unions have separate NCUA share insurance rules. This does not mean you should name random people just to increase coverage. Beneficiaries should match your real wishes. But if you keep large balances at one bank, it is smart to ask how your account is insured and how the beneficiary record affects coverage. Here is what you can do. Step 1. Make a list of every financial account you own. Include checking, savings, money market accounts, CDs, credit union accounts, brokerage accounts, retirement accounts, and any old account you rarely use. Do not write account numbers in a place where strangers can see them. Do not put private bank details in YouTube comments. Keep your list in a safe place. Step 2. Contact each financial institution directly. Use the official phone number on your statement, use the official app, or visit a branch you already know. Ask one clear question. Does this account currently have a payable on death in trust for, transfer on death, or beneficiary designation on file? Do not ask only once for one account. Ask for each account. Step 3. Ask how the bank handles the form. Some banks allow it online, some require a paper form, some require a branch visit. Some may include it as part of a signature card or account agreement. The form may be free to add or update, but normal account fees can still apply. The important point is that the bank must accept it and record it. Step 4. Choose the beneficiary carefully. Use the person's full legal name. The bank may ask for date of birth, address, phone number, relationship, or tax identification details. Rules vary. Do not email sensitive information to a stranger. If the beneficiary is a minor, receives needs-based benefits, has serious debt, or may not be able to manage money, get qualified guidance before naming that person directly. Step 5. Confirm the change was accepted. This is where many families make the biggest mistake. They fill out a form but never confirm it was recorded, or they add a beneficiary to one savings account and assume it covers every account. It may not. Ask the bank whether the designation applies to one account or multiple accounts. Save a copy or written note showing the date, the bank, and what was updated. Step 6. Review the record after major life changes. Do this after marriage, divorce, death of a beneficiary, birth of a child or grandchild, a move, a new account, or a bank merger. Also review it at least once a year with your important papers. The best form is not helpful if it names the wrong person. You may be thinking, I do not use computers. That is okay. You can call the bank or visit a branch and ask for help with a POD or beneficiary designation. Ask whether a paper option is available, bring your identification, take your time. Do not let anyone rush you into naming a person you do not fully trust. You may be thinking, my child already has power of attorney. That may help while you are alive, depending on the document and the bank's rules. But it usually does not give authority after death. After death, the bank will look at ownership, beneficiary records, estate documents, and applicable law. You may be thinking, I already have a will. A will is still important, but it should match your financial account records. If your will says one thing and your bank beneficiary line says another thing, your family may face confusion. Review both. You may be thinking, I do not want anyone to know what I have. A POD beneficiary usually does not get access during your lifetime. The person normally does not control the account while you are alive. Still, ask your bank how it handles privacy and beneficiary information. Before you take any step, listen to this safety warning. Scammers use fear around death, inheritance, and frozen accounts. They may call pretending to be from a bank, a government office, a debt collector, or an estate department. They may say money is frozen and must be unlocked with a fee. They may demand gift cards, cryptocurrency, wire transfers, verification codes, or passwords. That is a danger sign. A real bank will not ask you to pay an inheritance unlock fee with gift cards or crypto. If someone contacts you first, do not give your social security number, bank password, debit card number, or one-time login code. Hang up and contact the bank through the official number on your statement or through a branch you know. Also, be careful with debts after someone dies. Family members are not automatically required to pay a deceased person's debts from their own money unless they shared legal responsibility, are responsible under state law, or another exception applies. The estate may have to handle valid debts. If a collector pressures you, ask for written information and get help if the situation is unclear. There are limits to what a POD form can do. State law matters, bank rules matter, account type matters. Some business accounts may not qualify. Some retirement accounts have separate beneficiary forms and tax rules. Brokerage accounts may use transfer on death language instead of payable on death. A POD designation may not solve every family dispute. It may not protect funds from every creditor claim. It may not replace a trust for complex family situations. There is also no confirmed federal deadline that forces every senior to file a POD form. This is not a new government benefit. It is not a Social Security bonus. It is not a stimulus check. It is not one national form that works at every bank. The useful action is simpler. Confirm what your bank records say before your family needs them. So bring this back to your situation. If you have one main checking account, ask whether a beneficiary is on file. If you have several accounts, check each one. If you are a spouse, confirm whether the account has survivorship rights. If you are an adult child helping with bills, do not assume that helping during life gives access after death. If a loved one recently died, get certified death certificates, notify the bank, and be careful with federal benefit deposits after the date of death. The central message is this: the form matters because it is recorded before the emergency. A payable on death designation can tell the bank who should receive the remaining money after death. Without that record, the account may be held until the estate process provides the right documents. Today, take one calm and useful step. Review the official records for your bank accounts. Ask for the payable on death, in trust for, transfer on death, or beneficiary section. Confirm the names. Correct old information. Save proof that the update was accepted. And if your family situation is complicated, speak with a qualified professional in your state before making major changes. Remember what was confirmed today. Your bank account does not automatically freeze in every situation when you die. But an account in your name alone, with no joint owner, no trust, no survivorship rights, and no beneficiary on file, may be held until the right estate documents are provided. The form to ask about is usually called a Payable on Death Beneficiary Designation, POD, ITF, or TOD, depending on the account and the bank. Seniors with single-owner accounts, spouses who are unsure about account titles, and adult children helping parents with bills should check this first. The most important safety warning is simple. Never pay a stranger to unlock an inheritance. Never share passwords or private account codes with someone who contacts you out of nowhere. Deal only with your bank, credit union, court, Social Security, IRS, or other official agency through known official channels. If this helped you understand the issue, share this video with someone who has a checking account, savings account, or CD and may not know what their bank records say. Subscribe to Use a Life Bulletin, turn on notifications, and come back for clear USA updates on Social Security, Medicare, taxes, benefits, immigration, banking, and money rules that can affect your family.